Hi, I'm Shakina Sohena, Commercial Editor at Mortgage Solutions. Welcome to this session. Glad to have you with us and hope you've been enjoying this event so far. For this session, we'll be joined by Neil Wyatt, Sales Director at Mortgage Brain, who will be sharing ways to harness technology to increase efficiencies and improve the customer experience. There will be some time for questions after Neil's presentation, so please remember to ask them in the question box on your screen. You can ask them throughout the session, so you don't have to wait for the presentation to be over. I'll now hand over to Neil for the presentation. Thank you.
Firstly, good afternoon to everybody. Thank you for joining us today. I suppose it's only right to start this presentation with a little bit about me and Mortgage Brain, and why we believe that we're in a really good position to talk to you about efficiencies and customer experience. I've been in financial services and specifically mortgages for the last 25 years, having started many moons ago with a business called Private Label. They were the first proper packager in the UK, so in essence offering outsourced administration for brokers. I then worked for a number of mortgage lenders in various roles, from underwriting to sales to operations. And back in 2000, I set up probably one of the first of the UK's outsourcing mortgage companies called Connect. From 2006 onwards, I ran Platform, all of the mortgage distribution, mortgage processing and intermediary relationships, up until 2019 when I joined Mortgage Brain as Sales and Marketing Director. Mortgage Brain are uniquely positioned in the UK, owned by 6 of the largest lenders in the UK. We serve both brokers and lenders, and obviously third parties as well, whether that's conveyancers, aggregators, comparison websites. And we've got an unrivaled history for winning awards across technology over the last 35 years. My role here is to take the technology that we've got as a business, to understand the new technology that's coming into the market, and really to work with both brokers and lenders to understand the challenges that they face in their business, as well as helping educate them on the challenges that we see coming down and how we can build solutions that might help them. This isn't a sales pitch for Mortgage Brain, but hopefully over the next 20 minutes or so, I'll give you a bit of an insight, maybe scare people with a few stats, not in a bad way. And hopefully you'll leave the session with some things that you didn't know and a bit of a wow moment. I want to make sure that there's time for questions, as Shalini quite rightly said, afterwards. So I've got a little timer here, although you can't see me at the moment, and I'll try and not talk at you for more than 20 minutes. So a little bit about the marketplace that we operate in. There's over 2,500 fintech stroke technology firms in the UK. And when I say there's 2,500, that's just fintech and technology firms that are actively looking in the building society sector at the moment, looking at all forms of financial services across building societies and banks. Now, clearly for us, we're focusing today on the mortgages and the protection side of it. But if you look at what that means for a bank and a building society today, if you're sitting in one of these institutions and you're thinking around, okay, what do I do? Who am I going to actually take to run my internal mortgage application systems? Who am I going to take to run my completions or my servicing of customers? Who am I going to do my credit referencing with? Who's going to validate my customers' income? You can imagine that it's becoming an ever increasingly difficult job for people to actually cut through the who's who. There's a number of these firms that have funding that might not be here in a year, in 2 years' time. There's a number that will grow, and there'll be a number of people that have been here for a long time that will fail to evolve. And as such, they will get taken over. And when I say taken over, I don't mean acquired. I mean, they'll be in a position where the new entrants, the challengers or disruptors, as we like to call them, will come in harnessing the latest technology, meeting customer needs. And customer need doesn't have to be a consumer. It can also be a business. And they'll use that latest technology, and they'll understand what all the problems people face are and what the challenges people face are. And they'll actually bring new technology which drives fantastic benefits for everyone that's using it. One of the telling parts here when we talk about efficiencies is 81% of these firms that we're talking around here have less than 50 people. And if I look back to some of the roles that I've done over the years, we used to have hundreds of people processing mortgages. Now, mortgages are still going to need that human touch. It's still the most emotive thing that you ever do, a bit like having any form of insurances. It's still an emotive process, and people will always want their hand holding. And I believe firmly that people will always need that person on the end of a phone or the end of an email that can help and support them. But one of the scary facts that came out of this survey by Wyatt Consulting back in October last year was 86% of the consumers they spoke to were using a form of online technology as part of their daily routine. Now, that could be internet banking, but there's now tools out there, which I'll come on to later on in this presentation. Things like consumer portals, whether that's websites, whether that's Best Buy tables. The reality is that consumers nowadays, and we've all seen it post the pandemic, are really interested in how they can use technology either to find information or get the services they want. So how's it going to change? If you look at Generation X and millennials, they're going to make up 75% of the workforce by 2025. I look at this a slightly different way. I've got two children. I've got an 11-year-old daughter and a 13-year-old son. I used to think there was a 5-second rule when you loaded a web page or you wanted someone to contact you. I think in their mind, that 5-second rule is 1 second. They're growing increasingly impatient when it comes to technology, increasingly impatient and demanding in what technology's got to do for them, whether that's them accessing a game or their GoHenry account. The amount of times I get told, oh, the Wi-Fi is not working, Dad, or it's too slow. It's unbelievable. So we're talking here about people, Generation X and millennials, by 2025, which is 2.5 years away. Actually, just go forward another 5 years, another 7 years. What are the children as they come out of university, as they start looking at the financial services products, what are they going to be asking us for? Well, what we do know is that lifestyle, it's incredibly powerful now. Everything is there on mobile devices, whether it's Android, whether it's not. There's an expectation that everything is online, and it's on demand. This is now they want answers, they want information, and they want it instantaneously. But also they want to make sure that information they're getting, that instantaneous, is correct. They will be happy for certain transactions to do more self-serve. We see that every single day. But, and this is the big but, whilst they want to research and find information that's there, and they'll expect a business that they're potentially going to transact with to have that information to hand, that face-to-face reassurance is undoubtedly going to stay there. And the ability to share and exchange information. So securely, we've seen that, and I'll talk about open banking in a moment, but that ability to share and exchange information in a secure, real-time manner is going to become vitally important. So what does that mean when we look at the world that we operate in? When I say we operate in, I'm going to focus on the mortgage space now, and no doubt things that you or people in your business will be looking at on a day-to-day basis. The way in which lenders and insurers provide information to us, the way in which transactions are completed, the type of products that are on offer will be changing. We already know that over the last 2 to 3 years, mortgage sourcing has moved on from what was historically just a price. It's now the policy, it's the affordability, and it's increasingly becoming about the property. You look at what's happening with property and the property market, whether that's increased flood risks, EPG ratings, green mortgages, zero emissions. And again, we've got to be careful when we talk about 2050 and 2025 because nothing's down in stone yet. But these is all information that customers are going to want access to as they go through that home buying or home ownership journey. And we've got to make sure as a business and as businesses that we've got the right tools to be able to give customers that information. And if I go back to what I was talking about a moment ago, customers are going to be able to expect that we've got that information, and we've got that information readily available and accurate. When we look at self-service tools, we've got a client portal that sits around our back office system that we've got just over 5,000 mortgage brokers in the UK using. 32,000 unique customers were using that portal this year so far. If I go back 3 years, that was less than 8,000 people. So the impact of not only the pandemic, but the comfort and familiarity people of all ages now have with using technology to engage with people, we've seen that growth. That's nearly a 5-fold increase in the amount of people using it. And I mentioned open banking earlier. It's a bit like the hockey stick. Open banking now has become quite common practice. If anyone's car finance, personal loans, open banking, it's matter of course. It's not quite in the mortgage space as yet, but actually, if you look at the time it took to get the first million users, the second million, the third million, the fourth million, and just past the 5th million, they've managed to go from 4 million to 5 million users in the same amount in a quarter of the time it took to go from 3 to 4 million users. So whilst only 5 million users is still a small number in comparison to the amount of transactions that happen in the UK today, actually that hockey stick and the amount of people using it is growing rapidly. Now, what does that mean for us? And when I say us, again, I mean your businesses and our business and the people that we're connecting with. That likely means that over the next 2 to 3 years, the use of open banking, the trust in open banking, is likely to become more prevalent in our day-to-day workings that we do. And it has a number of benefits. The rising one and the really interesting one is the use of chatbots and AI. And this isn't to eradicate that human touch. This is to eradicate the need to actually get involved in complex conversations when the information is there at the fingertips. And actually what that means is people should have more time to actually have the conversations where the conversations need to happen, and actually use the AI, use the chat box, use the functionality or the technology that already exists today to actually ensure that the amount of time they spend talking to people is done in the right manner. So what does that mean, and bringing that to life for us? Where do we sit with things like this? I think for us, and what's driving the recent boom in technology, and no doubt you've all heard a lot of things about tech, and if you follow it on LinkedIn or if you follow it in the media, there's a lot of noise. I think the reality is, once you cut through the noise to the reality, there are 4 key areas that are really important to brokers and lenders today. The first one is the mortgage research part of it, and I'm going to talk a little bit more about that in a minute. The second one is the back office tools that people use. And why the back office tools, the CRM or your internal systems? These are the tools on the back of GDPR, on the looming regulatory changes around consumer duty. These are the tools that are going to be absolutely critical to ensure that you are engaging with your customers in a timely manner and providing them the information that they need. We're building out a new CRM. We see the fact that the world is changing rapidly. And if I'm honest, the old CRM that we've got probably wouldn't stand the test of time over the next 3 to 5 years. So actually build and develop for the future today, which is a bit like our mantra. We talk a lot about, excuse me, mortgage tech providers, big tech companies, consumer comparison website. No doubt we've all heard about disintermediation, the rise of the Amazons coming into the marketplace. The reality is, in the world in which we operate, I don't think there's any other industry where you can have millions of consumers that can go onto a Facebook page, a LinkedIn page, talk to a friend in the pub, talk to someone outside the school, and have a range of people on their doorstep more than willing to give them advice, and quality advice. We're seeing more and more businesses actually enhancing their own websites, using plugins, using tools on their websites, because they realize that effectively is their shop window. So what's going to change? What are the disruptors? What are the threats to us? I think the biggest threat at this moment in time are the larger intermediary firms, if I'm honest, and the comparison websites. Why are they a threat? They're a threat because they're going to give and have the technology that will allow consumers that want to self-serve, that want to go on a seamless digital journey, the ability to do that. What that does mean is it means that smaller businesses have to be able to actually have the tools in their back pocket to be able to digitize their journey for their customers that want their journey digitized, but also have that hybrid model that means that a consumer that doesn't want to trade purely online can actually jump out and talk to someone. And I think that's a huge advantage and a huge benefit for what I would say is your typical brokerage financial advice firm. And when it comes to lenders, we're going to see new lenders entering the market. We're going to see enhancements in the technology that's used. We're going to see a reduction in the amount of paper that's needed, and we're going to see a lot more integrations. Now, I liken this to, if anyone on the call remembers going back to the good old days, as I call them, you used to have a paper-based application form, you used to put a sticker on it, you used to send it to the lenders. The lenders would then key it onto their systems. And there came a point when the lender said, why are we keying all this information on? Why don't we build a portal and make the brokers or the brokers administrators key it onto the systems? I think we're on the cusp of going full circle. And the reason I think we're on the cusp of going full circle is there's a lot of lenders now investing in their own digital infrastructure. They've done it in their direct channels. It already works for them. Certainly those retail banks that have subsidiaries that do personal loans or second charges or car finance, actually the ability now to allow someone to key data in remotely and have that data validated. We're starting to see that now in the mortgage space. So what does that mean? And when we talk about digitizing the mortgage journey, again, I talked about those 4 key elements for any part of the mortgage research. So sourcing will continue to develop and enhance. I think within the next 12 to 18 months, at the moment what you've got is you've got product pricing, which is what you all probably recall is where you get your ESIS and where you look at all the rates. It becomes more important than that. We've actually just integrated into our sourcing solution a real-time AVM, which allows you to give the client an instantaneous valuation of their property. That valuation is driven by HomeTrack. They provide 21 of the top 25 lenders in the UK with that same data. Searching criteria. Again, I talked to a lot of brokers that would spend hours picking the phone up to speak to a BDM or speaking to a mortgage desk, getting one answer, not quite liking the answer they've got, so speaking to somebody else. Actually, there are systems out in the marketplace now which allow you to search multiple elements of criteria from over 90 lenders. That's covering over 99% of the market. Now, you imagine the time that can be saved there. Affordability, again, that's more and more critical now when it comes to the research of a mortgage and what's got to be done. Again, I think for us and what we see is the ability to go out and fill out one form and actually have that form pre-populate 37 different lenders' calculators and pull you back the identical response to that you would get if you went onto their systems alone. And I think this is the big one. Submissions. I talk a lot, and I've spent years talking to admin teams across various brokers and my own teams, and the frustration around the look and feel, around how every different lender's online portals are good or bad, the information's not accurate, case tracking doesn't work, they go down. Imagine a world where from your own proprietary systems, whether you use my CRM, whether you use a different CRM like 360.net or Smarter, imagine a world where you've got the information in that system from a client fact find, and you can simply transfer that information straight to the lender without any rekeying, without anything, without logging onto that lender portals to a thing. Take it one stage further. Imagine that your system doesn't have that link, but you could log into a single website. And from a single website, you could key in decision in principles, possibly full mortgage applications to 9, 10, 15, the top 20 lenders in the UK. But imagine if it failed a decision with Halifax and you didn't have to rekey it because you could just simply transfer that data to the Santander form at the touch of a button. This is real. This is already in play in the marketplace. This will continue to evolve over the coming years. I've said, and I reiterate, I think by the time we get to the end of 2023, 95% of the decision in principles that your businesses will do, you'll be able to do online. And you'll be able to do it online either from your own proprietary systems, your in-house systems, or from a sourcing system, or from logging on to a standalone website. So what does that mean? And just to summarize, I think what I'm saying is the fact that the pace of change in technology has never been quicker. The pandemic has driven a lot of that, but we do all have to be mindful that whilst we've probably worked in a certain way for a number of years, that our customers of tomorrow, and to a certain extent some of the customers of today, are potentially and highly likely to expect us as businesses to trade in a different way with them. There are tools out there now to help support that. And I would just implore anybody that wants any more information to reach out. We believe strongly in collaboration. You don't have to be a customer of ours to talk to us around your business. For me, it's around being consultative. And ultimately, we want to make sure that we are building tools for intermediaries and all people within that intermediary business that actually help make their lives easier and protect their business and drive a really positive customer experience. I said I was going to try and talk to you for 20 minutes. As usual, I've just overrun slightly. I'm at 23 minutes. I'm going to share my screen. Thank you for listening, and happy to take any questions that you may have.
Thank you very much, Neil. I hope everyone watching found that interesting. And now we'll go to questions from the viewers. So firstly, I want to know, you mentioned a little bit about finding the right way to connect with clients. And what are the best ways to identify how a client might want to be communicated with?
I think what we see, I mean, bearing in mind we've got over 13,000 brokers that use some of our tools. I don't think there's any cat standard way that a customer would want to be communicated with. I think for me, it's around ensuring that at the point you engage with a customer, that you're actually asking the customer how they would like to be communicated with. Or on whatever you've got as a business, whether it's on your literature, on your website, are you actually saying to customers that they can deal with you online, they can deal with you via email, face-to-face, telephone? Have you got LinkedIn pages? Have you got Twitter? Have you got social media pages? Have a think about the way that you all deal with businesses and friends on a day-to-day basis. And can you offer that to your customers? I mentioned earlier on that the nearly 33,000 unique users of a portal. They use it in various ways. So, sorry, I just realised people can't see me. Hello. They use it in various different ways. We've seen a huge increase in the amount of secure messaging that's been done. And if I look at just things like websites, we started a service where we build websites for brokers. We now have over 200 brokers where we power a website for them. And that website allows a customer to come onto that website and create online inquiries, which if you're using our technology will populate and create activities for administrators or people to contact them. So I don't think there's any sort of magic wand. I think it's a case of if you all went away to your own businesses and looked at how you communicate, everyone's got different preferences. The question is, can you offer everything? Can you offer something to everyone? Otherwise, potentially what you're going to do is have customers that just switch off or turn away.
Of course. And you mentioned a little bit about firms that just sort of fail to evolve or don't want to evolve. How might people be able to deal with employers or companies who are reluctant to adopt these new changes in technology?
I think for me, the voice of the customer is huge. I think being able to actually talk to customers, I don't know, and again, something that I've put in place since I joined this business, we send out customer surveys all the time, and we like to listen to how we can improve. What could we do differently? I think if you're leading any business and you're not prepared to listen to what your customers are telling you, that's a huge risk. So I think for me, do you send out questionnaires after the mortgage has been completed, after the protection's been done? I know that we all communicate with customers. I know the mortgage completes, we welcome them into their new home, but do we actually ask them what we could have done differently, how they rated the service we give them? And actually, do you spend time as a business actually looking at that? And for me, that's the most important thing any business should be doing.
Of course. And linking to that a little bit, how can mortgage administrators keep on top of any new developments or trends that may be coming down the line?
I know there's, I would be saying to people all of the time, whether it's the mortgage industry publications, if you register for the latest mortgage updates, there are always free webinars that are run that you can join. There's one with Home Track next week, I think. There's criteria clinics. There are so many points of information. I think for me, if your local BDMs come in from lenders, talk to the BDMs, ask the BDMs. If the BDMs aren't contacting you, speak to the brokers in the office and get the BDMs to come in and spend some time with you as the administrator. I think for me, it's a case of, in an ideal world, people would come to the administration and do events like this. I think where that doesn't happen, there is information out there that can be done. And I'm happy, Shakina, that if we need to, we can look at maybe doing some points of reference as to areas we think that people could go to get that information.
Of course. And so how can mortgage administrators determine which ones are the most effective for their firms?
When you say which one's the most effective, what do you mean? Sorry.
So which channels would be best for their client base, for example?
Yeah, I think that comes back to, do you understand what your customers actually are seeking? So this to me comes back to some of that conversations around, let's say we've done 100 mortgages and 1,000 protection deals over the last 12 months. Do we actually understand that of all those customers we've spoken to, and potentially some of the customers that have chosen not to use the services that your firms offer? Do we understand the why? Do we understand what they would have done differently? I think if you start understanding the bits and the gaps that you might have as a business, or what you do really well as a business, it's then easy to try to match what you're looking for. Otherwise, the danger is you can register for all sorts, you can listen to all sorts, but it's got to be realistic to the business that you trade in. So if your business is active in buy to let, I'd be looking at what technology is coming down the line, what information is there for landlords.
Mm-hmm.
I mean, if you do if you're an online business now, there's a lot of information around open banking. There's a lot of information around digital ID, land registry. There are firms out there now talking about blockchain. It can be a minefield.
Mm-hmm.
And I came back to what I said earlier on. Over 2,500 firms out there at the moment, all trying to promote the products and services they offer. And that's just into banks and building societies. So I think there's a talk to BDMs, talk to the practice principals, talk to the advisors in the firms, talk to the technology companies. I think we're all really keen to work with the industry. Certainly we are, to work with people across the industry to make sure that we're either providing the services that they need or access to the information that would make a difference.
Of course. Thank you very much. And with that, that is all we have time for. So thank you all for your questions. Any questions that are submitted afterwards that haven't been answered, Neil will get back to you in touch directly. The next session is at 1 p.m. with Pepper Money. So I hope that you'll join us for that one. And that will cover how mortgage administrators can build their personal brand and evolve in the industry. But for now, thank you, Neil, for joining us, and thank you for your presentation. And I hope everyone watching found that insightful.